Okay, hello everyone. I'm gonna try to keep it as clean as possible. Get straight to the point. We're gonna go through the cross asset class analysis. I'm gonna outline once again the update and outline the map of the current events. We will try to eliminate all of the possible negative catalysts. At least be aware of them. Put them on the map. I'm going to talk about Reaper facility a little bit and how it may be impacting the markets. And we're going to talk about the upcoming QRA, and we're going to talk about the earnings season, and then we're going to get straight into the trade ideas. I have 3 trade ideas that we worked diligently over this long weekend, and we're going to discuss them. Let's start with Bitcoin. Big picture view and thoughts off the top of my head. First of all, the trend signal is positive. The trend signal, once again, get into the liquidexpro.com, let it load a little bit, give it some time. The trend outlook is still positive, and plus 43%. We are 84 days into the market, not planning on doing anything until the trend signal changes. The trend signal will change after the break of 41,155 if we are looking at the futures currently. But just let's look at this fractally and outline what we think is probable. Yes, we had this exogenous local event that is tied to the cryptocurrency market, is the launch of the ETF, and it was a seller news event, obviously, and this is being confirmed by the first meaningful signal on a trade basis of a relative weakness in Bitcoin price. This is the first such signal. This is the first break in trade since the beginning of this move. Since the beginning of the not this. I just wanted to change the color. This is this one. Yeah. Since we called for long in and around these areas, this is the first signal of a potential retaliation, of a potential consolidation, a potential retrieve in Bitcoin price. In what shape or form will it take? Will it transpire? We do not know. At this point, we never know this. Nobody knows this. But the probability that we're going to go below 41,000, 39,000, maybe 35,000 is very heightened at this point. From the trading perspective, no longs is to be had on Bitcoin. You would want to be, if that is you want to trade it on a trade basis, you would want to be short this. That being said, all of this movement, we are going to treat this as just another opportunity to get in. If that is, we break the trend at 41,000 and continue lower into 35,000, maybe even 33,000, because the overall setup is as such and very, very similar to the one we had on SPX. When we came into the tail resistance, we just touched the tail, just kissed the tail resistance and retrieved on a trending basis, and then continued into the all-time highs. This situation looks very, very reminiscent of that. Came into the trend, or into the tail resistance. We've been outlining that this is where we're going anyway, and we came into this, we just touch this one again, and currently showing the first signs of weakness. Whether this is going to be something like consolidation and continuation, I would not be betting on this. First of all, we are in the market already anyway, full stop. We do not know, we don't need to guess this, but this is one of the possible scenarios. The other scenario is the reaction off of this very significant level is going to be proportionate, and we're going to break this and continue lower and consolidate right here. We can consolidate here for a couple of months, honestly. I wouldn't call it months, but let's say a month, maybe month and a half. Wouldn't be surprising at all. So how are we treating this? The break of trend right here is another opportunity to add in. The lower we go, the better the possible potential opportunity to get. The better the bargain. So the Bitcoin is positive on tail trend, but negative on trade. It's showing the first signs of weakness into the very, very crucial and key area off of which usually you always get a significant reaction, the tail level. When you come into the tail level on an beam that extended on high volatility, you touch the tail level, they're usually a proportionate response. These are just flows. This is just flows, and this is just the reality. If we're getting and dipping below the 41,000, this is a buy, this is a buy anyway. This is our outlook. We are in the market, not seeing anything currently. This is just an overall update. The things like MSTR, of course, they're losing their premium, absolutely dying. MSTR, coin block, all of these things that people used to play because they didn't have the ETF. Right now we have the ETF, and why would you even touch something like MSTR or use it as a proxy for Bitcoin price when you can just get your exposure to Bitcoin directly through the ETF? So yeah, MSTR, I mean, was an incredible short. We just completely missed it, honestly. No, we wasn't paying attention to this as close as we should have had probably. Is that trade still to be had in MSTR? I suspect yes, but not at these prices. You have to wait until we come closer right here into the intermediate lower high on MSTR and maybe continuation. But how you play MSTR is through, usually how we play the MSTR is through Bitcoin. You don't look you don't try to discern the signal from the MSTR itself. You look at the Bitcoin, and if Bitcoin signals an expansion, usually MSTR will pick up anyway. However it looks, however the flows look, it will just follow the Bitcoin. And I suspect that if Bitcoin really falls below 41,000, the MSTR will fall even harder. So this is not the low for MSTR, and the potential retracement into $300 is probable. If that is, we break the trend level on Bitcoin. This is our short-term picture. Negative, short, be short, don't be long on the short-term basis. Trending picture looks great, and the tail picture is absolutely brilliant. Do not forget that we still have the 21st of April, if I'm not mistaken. It seems like I have lost the outline that I had, the line. It is in April. I'm talking about the halving here. It's going to be in April. I think it's 21st. I don't want to check it, but it is in around that region. And overall, the seasonality is such for Bitcoin that after a couple of months, it gets, after the halving happens, it gets really good, really good. And if history is any indication, and if macro remains positive and the macro backdrop, macro liquidity remains positive, and we're not getting the things that we were getting right here, if you remember our post about the QRA announcement and the fact that the Treasury is issuing a shitload of bonds, this puts pressure on all the risk assets, even on Bitcoin. You saw it right here. It recovered very quickly, but nonetheless we had this reaction. If we're not getting anything of that nature and liquidity backdrop remains positive, which will likely remain positive, but we shall see, we shall look at the QRA announcement, judge their intentions of the Treasury, and intention of the Federal Reserve that already started talking about the potential easing, already started talking about tapering the QT because they see the RRP. Why not? Let's just get into the RRP balances. They see the RRP balances dropping, and this week alone, it dropped 90 billion from 693 billion down to 600 billion. By that rate, 6-7 weeks, and it's gone. If that continues to drop at 1.7, by that rate, it will be gone at 6-7 weeks. There are a couple of problems. First of all, the RRP facility is a source of funds for Treasury to issue into. Treasury comes, let's look at this. This is it. Implied bill funding for the next 2 quarters based on the recent borrowing estimates. From the TBAC's Treasury letter, and the breakdown of the issuance, the gross issuance is, you can see this right here. This is from October to December 23, and this is the projected for this quarter, January, March 24. The gross 816 billion. and the ratio is right here. Implied change in bills. This 586, and this is 230. This is a 80% bills and 20% bonds. Anomalous, very anomalous ratio, judging by the history. And the RRP facility, and these bills are being targeted directly. RRP facility is being targeted with those bills because they RRP money that are lying idly in an RRP would like to get a little bit more money through bills, and essentially they're just flowing into bills. And the other source that RRP provides is for the basis trade. What do I mean by the basis trade is, first of all, I will point you to this very great explanation by the Mark Meldrum. This is the video, the latest video that he posted, and this is this section where he goes through the explanation of the basis trade. What is the basis trade and how it works? Who are the different participants, and why it is important that when the RP falls back down to zero, what will happen? Essentially, in a nutshell, what will happen is if all remains equal, all else remains equal, and Federal Reserve continues with the balance sheet runoff, when the RRP drops to zero, the reserve bank balances will start dropping, and usually Federal Reserve does not like this. They targeting a certain level of bank reserves, and they don't like to see it drop significantly below that line. Who knows where that line is, but they are targeting this. Essentially, this is this. I'm not gonna. This just is gonna take too much time to look for it. But this is the idea. Essentially, they have to respond somehow. They will have to respond to this RRP facility being fully drained, because this will be negative for the Treasury, because probably they won't have the ability to continue with this excessive bill issuance, and they will shift into the more normal ratio, meaning we will get, because the gross issuance are rising anyway, we're going to get 800 billion, 816, 850, 900 at some point, and the ratio will normalize, and there will be another step function in bond issuance. And who knows how it's going to be absorbed. With such environment, if we were in a horrible recession, in a horrible slowdown, yeah, that would be some premium baked in, and market would have a very high appetite for absorbing that issuance of bonds. But right now, with the current environment, and we're talking about the potential outperformance and potential positive surprises on earnings front, the only source of funds is Federal Reserve, or the long end will have to rise once again to accommodate and to draw in the funds from various sources if Federal Reserve does not taper QT significantly, even maybe restart the QT, restart the QE. So that's the couple of remarks on the RRP and why this is significant. And we shall see. We will get another update on the RRP balances on 19th and on 26th. And we will get the QRA announcement on 29th, and the split, and we will get this ratio and projected ratio of bills to bonds on the 31st of this month. This is the area of potential danger, and we are looking at this, monitoring this, but this is still a couple of weeks ahead of us. So this is it. This is Bitcoin. I've been pondering if we should consider this shift in trade some sort of a negative sign for SPX, or can it be contributed or treat it as a just and something that is completely related to the Bitcoin itself because of the what we had, because of this massive shift in flows, because of this ETF premium coming out from Bitcoin, because of we are hitting the major level on Bitcoin and we're not, and we're hitting the major level on SPX, we're essentially hitting all-time highs. I do not have the answer, but this is worrisome if you treat Bitcoin as a leading indicator for the risk on assets. Well, Bitcoin has been pretty good at this. Let's put SPX on top of it. This is the SPX. And this is the gold. GLD has been pretty accurate in tracking Bitcoin very closely. Or Bitcoin has been tracking GLD very closely. But at the same time, by the way, if we look at the GLD, let's get to the overall rate complex. If you remember, we've been calling for consolidation on the dollar, on the whole currency front, which is particularly surprising. This resilience in Dixie with the continuous pricing, with this enormous pricing in the short term, and with the more and more rates being priced into the short end of the curve, and this drop in 2-year. Just look at this. This is the Dixie. This is a complete departure from what has been normal throughout the 2022 and 2023. This move in rates, because rates has been fully impacted and fully dependent on the pricing of the forward policy. 2-year yield, if it short end drops, the dollar will drop as well. If the SOFR pricing in more cuts, the dollar will drop. The dollar will drop. If the SOFR pricing out more cuts, or pricing in more hikes, the dollar will rise. And just looking at the 2-year yield is sufficient to get us the sentiment. And the 2-year yield at this point created a significant lower high right here on a trending basis, while the dollar not just challenging the trade, and well, the trend is far away. But this is first instance of the major divergences in between the short end pricing of the short end and the dollar itself. This is interesting. It is very, very, very interesting. Why? With what this significant pricing has been was associated. I don't know, this repricing of the short term and pricing in more cuts. Because what happened? We've been trading actively on Thursday and Friday, trading the CPI we've been preparing for us. And the CPI on Thursday came in mildly hawkish, mild meaning mildly hot. And the reaction has been complete opposite. There was no reaction, and when the PPI came in, we just dropped like a rock. And based on that, I don't believe that based on the mildly hot CPI print and mildly weak PPI print, that we would price in 50 more cuts into the short end of the curve. What the hell happened there? The previous week looked like we were pricing. It wasn't. It was completely out of line, and it wasn't about inflation at all. It was something exogenous. It was something maybe connected to the pace of how the RP facility is being drawn. I don't know, but this shows the sign of relative flight to safety, I guess, but only in the short end, in the pricing of in the rate complex. Nothing else has been impacted by this. Currency and the dollar held trade. Trend level is right here. Whether we're going to challenge this or not, with this drop in implied policy, further implied policy and pricing in of that more cuts, I have no idea what the dollar doing, being so resilient. But if this is a new normal, which is it's unlikely to be, we will understand what was the driver behind this when in a due time, I guess. But this is definitely a departure from normal stuff. This is the dollar. We honestly, I don't have any insight right here, other than to call for consolidation and no trades to be had on the currency space. In the currency space, honestly, there are better places to be in. Do not do anything in currencies right now. there was a play, there was a brilliant play right here when the whole rate complex shifted and broke trend and continued lower. That was a significant trade to be had. Right now, this is just a retracement within the negative trend, and this can lead us maybe into the trend resistance, and then we shall see what will happen after that. I might sound very stupid right now, but I do think it is connected to the RRP and to the people hedging something when the RRP really drops to zero. Well, there should not be any problem if the QRA comes in line, but how can it come in line if the RRP will be drawn to zero in such a fast period of time, so soon? Bank reserves will have to drop significantly. If bank reserves drop because they have to service the inventory, this is just negative for liquidity. This is negative for overall liquidity. Either Fed balance sheet will rise to compensate for this, or the long end of the curve will rise to compensate for this. The first one is being positive, and the latter is being negative for the risk-on assets. But if you look at the isolation, so what I'm getting at right here, there is no unipolar signal in the rate complex. I don't see right now anything that points to one direction. Different things pointing to different directions. But overall, dollar is bullish on a trade basis, and a slow continuation grind into 103, maybe 104 is likely. I think it might be likely. We shall see. We shall see what will happen. You should not be trading this. There are better opportunities to be found in crypto, in equity space, especially equity space. Just concentrate on the equity space because there are more things to do there, more profitable things to do there. And I believe that Dixie will be largely irrelevant. These intraday moves and moves in this trading range will be insignificant. Will have insignificant impact on the equity space. So this is the take on the Dixie. Euro USD, obviously this is the same thing. USD continues to be incredibly weak, and with the dollar, if the dollar continues where we just said 103, 104, then JPY will continue higher into 148. Looks like a high probability to me, but we not going to be playing JPY until we get a more clear picture of what is going on in the store market. We've been calling for the short in USD CNH, but once again, better places to deploy your capital. Oil continues as we outlined to be in consolidation. Would expect some more of this complete nothingness. One thing with oil, you have to be very, very careful of because in this environment of geopolitical tension, something can really snap, and if oil breaks a significant level, like it did right here, you have to be absorbing oil very, very closely and get ready to get long oil, because this would be the only thing that if that scenario transpires, some geopolitical tensions, and the oil spike will be associated essentially with that geopolitical problems, new wars, anything like that. The only hedge is just being long oil. You gotta know how to be long, how to trade it, but you gotta be long oil and maybe long gold at that point. But right now, nothing to say right here with oil. One thing I would note, people have been calling for long on oil if we break 74, if we break 75, but right now, things like XLE, XOP, OIH, XOM, LNG, the whole equity complex, and energy, oil equity complex, and gas equity complex is negative, meaning, let's look at this once again. Let's put on XLE and add CL on top of it. And the signal is crystal clear on XLE. This was a run on trend. On a trend basis, we broke the trades and we are going lower on XLE. And these things, the equities, usually lead oil on a trade basis. and these things signaling lower highs, a continuation lower. Maybe this is why oil cannot break higher significantly from here. But without a significant event, some sort of black swan, I have no idea why would you be long oil at this point. And being short oil equities on a trending basis just seems wrong at this point. Just picking a high frequency trade on a short term time frame makes sense, but because these things, if oil really goes, if something really happens, these things should be a very, very nice hedge to your portfolio, and being short of them on a trending basis doesn't make any sense to me. So this is the take on oil. Once again, nothing to do here, honestly. No trades. We are calling for high frequency trades on XLE and on equity space, but generally on a trending basis, nothingness. So far, nothingness. Nat gas with winter coming in colder and be getting colder, and nat gas should do something. I have no idea. We don't trade natural gas, and it's just reflexivity of the weather. So that's it. One thing that is connected to our trade idea is this bad boy. This is this is fun. The overall take from the perspective of the trend, from the perspective of the signal, just a qualitative analysis. Obviously, we've been calling for longs on UUN, on UUCCJ, on equity-related stuff for a long time, for a year already. This is a phase where it just goes parabolic. This price action doesn't signify. This signifies a very tight market, but it doesn't signify the presence of speculators. And until speculators come in, you will not get a blow off top, a significant blow off top in uranium prices like we once had right here. Like this, you will not get this until the speculators come in, until we will see this on the front page of a Wall Street Journal. This price action will and is probably already drawing the speculators in. So I'm not counting this as a significant uptrend and a problematic area. I'm counting this. This is the beginning of a potential end to the UUN trend. Not now. Not now. We think this will go higher. This will go higher pretty significantly. But if you wanna play this, you can either play this via spot, trading the uranium itself through UUN, or you can trade it through the URA, URNM, CCJ, and all the related equities, essentially miners. This is just a first order effect. So when UUN goes up, the miners obviously instantly reflect that in price. I'm proposing a second order effect. And this is another company. It's not directly involved in mining, but it's more of a distributor and a service company. So, general take that this overall fundamental picture for the uranium market remains incredibly resilient, and this does not change the general environment or investment environment, even on the margins, I guess. Even on the margins. You need a reversion to the mean. You need a significant investment to happen in order for this trend to be completely reversed, like we had in 2000. What was it? 2008 that I pointed this out. So we believe this is just the beginning. There will be a lot of volatility. There will be a shit ton of volatility, and if you plan on entering right here, you will have to accept a lot of variance in price. And just generally looking at this from the risk-reward perspective, it doesn't make any possible sense. But this will draw capital, this will draw attention to the space overall. And if we are correct that this is not the blow-off top, we think that this is the beginning of the initial signs of a blow-off top, but We may go to 37, 40, 44, 48, 50, even higher, and this will not be surprising at all. So, if let's say we are too late to the uranium party, we're too late to miners party, there is this company called LEU, which is engaged in a distribution of LEU, HEU, SWU, and HALEU. All of these things are acronyms for low enriched uranium. SWU is a necessary product for a process of enriching uranium. They are distributing this. They also sell raw uranium, and they sell highly enriched uranium, HEU, and they also their first company in the United States that created a HALEU facility, high assay low enriched uranium. This is low enriched uranium usually has 5% of its composition of uranium-235, the necessary component for the reaction uranium-235. So it's not so radioactive, but it's not that effective, and requires a lot of engineering to increase effectiveness. HALEU is something in between the HEU and LEU. It contains from 5 to up to 20% of the uranium-235, and the bulk of the HALEU in the world is being produced by Russia and China. Russia, 40% accounts for 40% of total HALEU production, and China for 10% of HALEU production. So together for 50% of the world HALEU production. This company is the first company that obtained licensing in 2023. In the middle of the 2023, they created and built and or started, and they are running, and they're already producing the HALEU. Essentially, they're producing the HALEU. HALEU is being used in new reactors that are being built, that are planned to be built, and I think it's just a better way. And this company, from the perspective of the signal, looks absolutely brilliant. The flow is incredibly positive on the trend basis. We are currently in a consolidation on the trend basis, but if our outlook for uranium is correct, if we are not entering the final phases of the blow-off top in uranium prices, but only the beginning, this thing has chances to run and run significantly from here. As soon as we break 58, this trend resistance that we've been under, this looks like a great opportunity this thing can easily run up to 90, 100, 110 dollars per share. They are being affected in a positive way by the rising uranium prices. The fact that this is currently happening with uranium prices draws more attention to this industry. The company itself is being well supported by the government because it is in a fiscal beneficiaries basket. 2.9 billion has been dedicated by the government and for this industry, for the uranium industry in 2023. And overall, looking at the perspectives, government treats this like a necessary and very important industry, and it has bipartisan support in Congress. So this company will be supported. The flows confirm this essentially, and this move in uranium can really be a catalyst for a continuation in LEU, in prices of LEU higher. They make money, and the structure of their contracts are they have 1-year contracts essentially of sourcing the raw uranium, LEU, HALEU, and their clients choose the distribution, when they want to take the bulk of this shipment and when they want to take less of this shipment. So quarter over quarter does not really indicate the full performance or the full capacity of this company to source the uranium. it just depends totally on their clients. But this move in uranium may cause the clients to reconsider, may cause once again, the clients are the largest utilities, utility companies in the United States. When uranium prices rise, you do not sit there and think, oh well, maybe I'm not going to buy uranium this month, or we're just going to shut down the reactors. No, whatever the price is, you buy uranium because you cannot stop your reactors, essentially. The 20% of total power supply is being generated by the reactors in the United States. So this is a very inelastic market, and demand is also very inelastic. Whatever the price is, people are going to buy this. Utilities are going to buy this. Maybe this significant jump in prices, and this announcement from the biggest supplier and miner in the world, from Kazakhstan, that they're going to experience a shortfall in 2024, upwards of 20%, which is incredibly significant in an already supply-constrained market. This can cause their clients, LEU clients, to reconsider, maybe up the orders, maybe take on the bulk of the shipment this quarter instead of the quarters after that, and renew the contracts, and so on and so forth. So this, looking at the beta is incredibly positive right now. It is very uncorrelated. It has a very, very slight correlation of 1.2 to the SPX, which is absolutely brilliant. This is very uncorrelated stuff, essentially. It is obviously correlated to the uranium prices, but not on a trading basis, and not as tight as the miners are, but this thing is correlated to uranium prices on a trending basis, especially on a trending basis. We've been observing through the periods of the last couple of years that the lag in correlation, essentially, when uranium prices rise, this thing, LEU, tends to lag behind and then pop significantly. When uranium prices fall, LEU tends to lag behind and then draw down significantly, and it can be vice versa as well. Depends totally on the internal flow of this separate name, of this individual name. And by the looks of it, we are currently in the process of creating a tail higher low, which is one of the best signals that you can possibly have. And if this movement persists in uranium, which we think will persist, because, well, the underlying supply issue is not being addressed fast enough in order to subdue this, and the speculators are gonna just come in into the market. So the imbalances are not being created right now. They will, but not right now. We're not observing significant imbalances. And this is it. The upcoming earnings we're pretty far away in March, 14th of March. But before that, how we think of playing this is, depending on how we're going to open tomorrow, we're going to start just tapping into this name, accumulating a small position with the ultimate stop below the tail support, which is below $46, and the potential we're going to hold. This is a trending long, we think minimum for the next 3-4 months, depending on the outlook, our outlook for the uranium market overall. But for 3-4 months is a very tight hold, and we believe it has, when it breaks this level, it has a really, really good chance of doing this, and when it does this, judging that this is a small cap, this is a pop of a 50, 60, 80% higher, which is with a defined stop loss. Very promising, very promising. So this is the idea. This is what we think. This is how we want to play the uranium. We have exposure to the uranium itself. We've been calling for this over the last year. but this is another way of playing this. So LEU it is, and one of the possible trades that I promised is LEU, trending long for the next 3-4 months. This is how we transitioned from uranium to LEU. We talked about currencies, talked about the oil and how significant oil for the hedging purposes in this is going to be this year. Once again, uranium itself, I just don't see anything right here. How can you play this with the tight stops? I don't see how you can play this with tight stops. You should have been accumulating this a long time ago, but right now, if you're not there, you have to look somewhere else, and your LEU is one of the things that you can look at. That is good. That is nice. Once again, this dispersion and divergences in pricing and rate complex is very, very vivid through the gold price. Very strange behavior from the gold itself. Why? Because dollar is rising and dollar is positive on a trade basis, and gold at the same time is positive on a trade basis. First of this first major divergences of this kind over the last 2 years. So quite strange it is. If you look at gold in isolation, gold has just created the strongest signal that you can possibly ask from our perspective on a trending basis currently. If gold were some sort of a growth stock or any sort of a stock that we are favoring and we are looking and studying and we want to be getting long, we would be buying gold right now, hand over a fist. This is why, because this is essentially creation of another weekly higher low right here, one after another after another. We've taken out the last liquidity, broke trade, created a weekly higher low. This only leads to the break higher in gold prices. Maybe the store futures, maybe the store market is right with pricing so many rate cuts, because either if that is my thinking is correct and this is somehow related to the RRP facility or something of that nature, and either Federal Reserve are going to cut significantly or they're going to restart QE, both of these things are positive for gold. The only thing that can be possibly negative for gold, mind you, on a short basis, momentarily, is a significant spike in inflation, because it will shift the expectation of the Fed policy once again into hikes, and will shift it higher, which is not going to hold this time, but it will be transitory. But overall, however you look at this, from the spectrum of least probable to the most probable scenario, gold is long right now. Every scenario from the least probable to the most probable is saying long gold, just long gold right now. Yes, you can. If you think that they're going to cut rates, you can play this through the store market, through SOFR, through Eurodollar, however you want to play this. Just buy TUA directly. TUA has been brilliant from the assets allocation perspective. Maybe not as a standalone trade, but from the asset allocation perspective, brilliant. Gold will outperform TLT this year and next year and the year after that. One thing that you can do is buy gold leaps with the implied volatility that we have right now in around 12%, which is very low for gold. And any event that will happen that we will see this move in gold higher, the implied volatility will expand upwards 15-17%, and you'll benefit from the rise in implied volatility as well. But if I dare to say so, this looks like this is, yesterday close. Might be something like this. Might be the final, even though I don't understand this, honestly, from a macro perspective and from the pricing, this an anomaly in store futures. Nobody understands this at this point. It's not connected to the CPI report or the further pricing of the Fed policy of the expectation of the market. Everybody, every trader. I have a trader that has been trading stock products and so forth, futures since 2006, and he's never seen this reaction to the CPI report. It was completely anomalous, and this anomaly only makes us more eager to get long of gold. Gold is a great diversifier for your equity portfolio if you expect cuts. Gold will perform beautifully if you expect significant recession, unemployment, right? Yeah, because they can cut for whatever reason, but all those reasons are positive for gold. If they restart QE, which they at some point this year, next year, we all just don't know the reaction of the QRA. We just don't know the reaction of another step function in the bond issuance. Gold will perform beautifully. This is just brilliant diversification for your portfolio. Having upwards of 20% allocation makes a lot of sense. And from the signal perspective, once again, this is very, very, very significant and very, very strong signal. So this is fine. This is gold. Silver, by the way, if you want to play this, if you think that something will happen, they will raise, and the store market is correct in pricing that path of policy right now, then if you think that gold is going to break out into the all-time highs, silver is going to absolutely explode right here, and you have an opportunity to enter with a very tight stop below this tail support. This is the reminiscent of this opportunity that I vividly remember from this time period. This was a brilliant trade, a creation of a tail higher low. But at this point, it was more obvious, and the overall rate complex has been pointing to the same thing, in the same direction. And well, this was a brilliant trade. But right now, if you know something that we don't know, this is your ultimate setup. This is absolutely, absolutely beautiful from the perspective of the trade. That's it. That's it for gold. I think it's something related to RP. I don't. Man, I'm so uneducated in this area. I want to be though. I'm trying to be. Let's not touch on copper. This is relevant right now. Let's talk about economic calendar for a second. From the economic calendar perspective, we just have a couple of Fed speeches. Will be uneventful. Just don't pay much attention. We don't usually pay much attention to those Fed speakers. They happen to come to speak every single week, and listening to all of them just makes your head spin. From time to time, there is a significant signal being drawn from them, but overall, retail sales, building permits, housing index we're gonna get on Thursday. On Thursday. And that's it. That's not a lot of economic news. We had a 20-year bond auction on Wednesday, and we get a tip auction on Thursday. From the economic calendar perspective, not all volatility should be this week. Where am I? I lost myself. This is it. We are right here. And yeah. So the 2-year, just to sum this up, and obviously therefore we're getting a bull steepening, meaning 2-year pricing in incredible amount of cuts, and the long end is staying intact. One would think that this should not be happening in the context of the current growth environment and inflation environment. Market is picking something up that we do not know right now. So this is it. This is the 2-year, this is the 10-year, 2-year and 10-year. This is good, this is great. Going into this week, going into the week after that, before the QRA, I do not see any significant movement, and before the QRA and before the FOMC meeting, which are going to have on the same week, I don't see any significant movement in the long end. So okay, nothing to hedge here, nothing to trade here. In the 2-year and the SOFR pricing, and just on the short end of the curve, I also don't know. People are proposing a just shorting the SOFR future right now, short in September or short in December, or putting on a fly March H4, Z4, Z5 fly, essentially, trying to trade the potential transferring of the cuts into this 125. I'm not a big fan of it, and from the perspective of the rate complex, I just no signal. I have no idea, but this is significant. This is very significant and very important. We just haven't discerned what is behind this. But one way to do this, if I were to play this probability, whether this is signaling immediate danger and recession, maybe something knows something. Gold, once again, just that dumb and that easy. Gold. From in Europe, now I'm gonna 10-year logarithmic change this. Now in Europe, the situation is different. 10-year and 2-year, well, there was no such reaction, and European economies are much more sensitive to freight indices rising right now, and these disruptions in Red Sea, and maybe inflation in Europe will start stabilizing and maybe picking up slowly because of those disruptions. And one of the ECB members just came out and said that we are not even thinking of we should not be thinking about rate cuts in 2024 at all. So just quite a different situation right now in Europe. But at the same time, look at the differentials in the short end expectations in US and Europe, and you would think that the dollar should be completely on its knees right now and dying. No, dollar is strengthening on a relative trade basis. What the hell is this? What the hell is this? I would love to understand these divergences because it's significant, but at this point we don't have answers. But that's fine. And just sum this up from the CAA perspective is credit. Credit is positive. The probability of a creation of a lower high in and around this region diminished significantly. Positive on the trade basis, positive on the trend basis. GNK is the same thing, LQD the same thing, LQD, LQDH, LQD, BKLN, mortgage, MTBA, VMBS. All of these things are positive on the trend and trade basis. All of these things signaling good times ahead. Credit is signaling buy risk assets right now. And broadly, the signal for the equity space, if you look just at the SPX, is positive. Once again, long stocks. Long stocks, the trend support is right here from the perspective of a tail picture right now. The thing is that this lag and this impulse that we're getting is supposed to be the strongest one, and will probably will be the strongest one. And with these if the QRA will be uneventful, I don't know how they're going to shift the issuance this time, but if it is uneventful, then earnings should come in good. relative to expectations, by the way, earnings right now is, here it is, earnings revisions, SPX index, on the low side right now, on the low side. So it doesn't take much to beat the expectation right now. So SPX can run. SPX can really continue to go higher and higher and higher. And this creation of a higher low on a trending basis just confirms this. The flows are positive. This, well, if you listen to some of the option market experts, they think that there's a window of weakness in between 17th and February 1st, but by the looks of it, it's most likely not going to be anything significant with this. These positive flows, not going to be anything significant. You have to be prepared for the potential consolidation for some sort of this stuff happening, but overall, this is a ripe environment for being long risk currently. Things like LEU, let's get to the trades. We've discussed the overall environment and the overall overarching trade of being long stocks, being overweight long stocks. There are a million ways that you can play this. We still look at the IWM and the potential creation of a weekly higher low right here and continuation higher. So essentially, SPX this is how it behaves, and if you put on some of the indices that we created, or even if you put on the IWF Russell 1000 growth, it outperformed SPX and will continue to outperform SPX if we continue to exhibit the kind of environment that we are currently showing. So we are looking into the small caps and potentially putting on the indices right there. We are looking selectively right now. Let's couple of words on Europe. Europe positive on trend basis, negative on trade basis. Short Europe on a short-term basis, maybe meaning 1 day to 1 week, and long Europe on a trend basis now. Nikkei is continuing to go higher because of the hawkish, dovish BOJ, and just generally great setup on a trending basis. Will and should go higher from here, I guess. Next thing, which is supportive, generally supportive for, once again, when this big of an index is rising and doing this is generally supportive for all risk assets all around the world. This is your basket, AI basket, which is continues to rip. Absolutely, this is one of the ways to play this. To play the long equity trade with the AI basket, the Japanese AI basket, and Taiwanese AI basket. These are the names which are in Taiwanese AI basket. Continue to outperform everything. We gotta put this on, by the way. Gotta let me write this down. Gotta go through this. Oh, the next thing is EWW. This is just as IWM is signaling, and EWW is signaling potential creation on a weekly time frame, meaning on a trending basis, potential creation of a higher low after this positive shift. You can play this through EWW directly or Agua. You can play this through Agua if you wish. EWW looks also great. This intermediate lower high, if there will be a break in this, there will potentially be a very nice continuation higher. The China stagnation period. No idea what's going on there. I heard Baidu happened something with Baidu. Yeah. Oh, I don't know what happened there. Apple is a good funding short. Apple is will be a relative underperformer in 2024. So essentially, you can go short Apple and get long of Mag 7. Mag 7 X Tesla. On a relative basis, this is a good trade. If you want to short something, if you want to find a standalone short from the Mag 7, is Tesla. So plenty of things can be said about Tesla. There are problems with margins right now. They're very hard transition. How the macro has been impacting the Tesla right currently. The shift in sentiment, the clear shift in sentiment, the absence of Elon Musk, and the slow vanishing of this Tesla hype may trigger a significant mean reversion in Tesla. This is a nice chart. This you can see right here is inventories of Model Y. This thing, they drop in the prices on Model Y, and they can't sell this shit. And this is the problem. This is the problem. And mean reversion, meaning there is a possibility of mean reverting down to $100. And how absurd it might sound, until they roll out something incredible like they are Dojo or AI, Machine God, anything they need more hype. They need something substantial. Without something substantial, if they disappoint on these earnings, with this, by the way, flow is absolutely abysmal, just atrocious. It's been a long time since I've seen this. This is a creation of a tail, lower high on the Mag 7 name. This is, holy smokes, this is bad. And even 194 is not the place to stop. If I were to say, and once again, they are in such a weak spot currently that if earnings disappoint, 194 easy, 165 over time. Now, I'm not saying tomorrow or this week, but the risk is skewed to the downside, meaning it pays off to be short Tesla. How are we playing this? This is another of our trades, another of our thesis. If you remember, we pointed out that on this day, we bought 1 week out 2015-2010 put spreads, January 19. 2010-2019 put spreads. They are already up 300%, which is kind of fun. We closed 50 of them and letting the rest of it run. And now, if that is, we want to play earnings, how we think of playing this? We are opening February 16 and March 26, February 16, March 25th or 26th, if I don't remember. 195, 190 put spreads, 1 to 4, 1 to 5 this time. Much less than we've been talking about this. This is 1 to 10 risk reward ratio, but this is less than that, but still. We think it is asymmetric enough if Tesla retraces this week. Honestly, there is nowhere to go for Tesla but down to 194. There is no liquidity, no interest, and the relative weakness of this name is astonishing, and the chances that we continue into 194 is much higher than retracing high. But if we are retracing to up to 220, 225, just adding two shorts. That's it. We're just going to be adding two shorts on Tesla. At the same time, obviously, being long Amazon, being long Microsoft, being long Meta, being long the rest of the game. So this is how we think of playing this. The other trade, and the trade that looks very interesting to us, is mean reversion in defense stocks in LMT and RTX. LMT and let's start with RTX. No, let's not start with RTX. We've been running for a pretty long time already. Let's stop this, and in the next video we're gonna go through what we're gonna be putting on this week. LMT, RTX longs, SMCI longs, Marvel longs, adding to Marvel longs, and UTI long as well. So this is how we think of playing this. Thank you for watching, and I hope you draw something of value from this.